Chancellor expected to cut cash ISA limit to £12,000. Good or bad idea? Article in the Financial Times on this. Now, if you know me, you know I come from a hedge fund background. I've written over 200 columns on investing in the Financial Times and a whole bunch of books. So obviously I am in favor of people investing more and holding less cash, subject to their risk appetites. And part of the problem that we've had in the UK is, unlike the US, for instance, is that people haven't invested enough and so their pensions are not growing. However, I know what you're all going to say. You're going to say, you nuts, we don't know what we're doing and you want us to gamble on the stock market? Yeah, if you don't know what you're doing, that would be gambling and speculating. I don't think by cutting the cash ISA limit, after all, your cash ISA, yes, it's tax-free, but you're earning peanuts anyway in terms of interest. I don't think by cutting that, people will necessarily put it into stocks and shares ISAs and buy stocks in Walmart, IBM, Intel, or whatever else. I fear that they just won't save it. They'll consume. Instead, they'll just spend it, blow it, clothes, whatever. Spend more money on Amazon, probably. Okay, just in time for the Black Friday sales. So the worry here is it won't have the impact it's intended to, which often happens with government economic policy, the problem of unintended consequences. But it gets a bit worse than that. If they then do invest with financial illiteracy, they'll probably end up investing in UK stocks, which generally lag behind US ones. So you've got a second problem. Personally, I'm in favor of investing, but I suspect this won't do it. If you want to learn more for free, I've got books, I've got courses, all free, and apps, tools. Have a look at alpeshpatel.com/links. We'll even do a free educational pension portfolio review for you as well. Okay, thank you.